This week's market volatility from all the fresh economic data probably has you a bit dazed and confused. So we have two money managers with us now to share their views on what they're doing and buying in this volatile market. Joining us tonight, Nancy Tengler, Chief Investment Strategist at Tengler Wealth Management, and John Petrides. He's the Portfolio Manager with Tocqueville Asset Management. Welcome to both of you.
Thanks for having us.
Ladies first. Nancy, what are you doing in this environment? I mean, you have a pretty structured formula and have for some time now about how you buy stocks.
Well, every market opportunity in our view, every market decline is an opportunity. JP Morgan just came out with a study that said over the last 20 years, stocks returned 6%. If you missed the 10 best days, you earned 3% a year. So we look for high quality names in times like these. And we've been buying cyclical stocks, agreeing with Mike Santoli's report, and some consumer stocks and some healthcare.
John, you also like it when the market goes down, right?
Yeah, it's kind of like, when you go into a car dealership, you don't want them to mark up the price of the car. You want to buy it on sale. So when the stock market sells off, that gives you an opportunity to buy really high quality companies at a discounted price. Remember, the goal is to buy low and sell high. So in this environment, we like is, given the low yields in the market, we're looking for higher dividend income plays, where the company is paying out less than 50% of their earnings. So we have protection on the yield, and we think the high dividend yielding plays are the way to go in today's low yield environment.
Nancy, the environment, though, for this market is really multi-pronged. You have headline risk from trade. You have the Fed in play. You have a decelerating economy in some sectors. And you put that all together, that's an awful lot of different things that the market and an investor has to navigate.
Definitely, Sue. And we've seen it this year. The volatility has been heart-stopping at times. And for the individual investor, I imagine even more so. But I agree with John. I've been buying high dividend payers for decades, and they give you some protection, and they also give you insight into what management is thinking. These managements don't want to cut the dividend. So if they're raising the dividend and their payout ratios are low, back to what John said earlier, then you have a recipe for success over the next 3 to 5 years. Valuation is a leading indicator.
John, give us for instance, what are you buying here? What do you like among those dividend payers?
Yeah, so we think in this environment where yields are low and volatility is high, Verizon is a really attractive story. Verizon doesn't need any introduction, but when you're getting a 4.25% dividend yield and the stock is trading at about 12.5 times earnings, and you have the entire mobile market eventually upgrading to 5G to the next generation, we think a high quality franchise like Verizon is a no-brainer here.
And Nancy, what would you be buying or did you buy in this week's volatility?
Yeah, so we bought Pepsi. Now, we already owned it. We added to it, and then today's earnings were excellent. I wish I owned more. Just under 3% yield, and it's been growing about 9% a year. We bought AbbVie. That's a 6% yielder, a little riskier. It's a longer-term play. And we added to Broadcom, which is yielding about 4%, and they're growing the dividend aggressively, like 50% a year for the last 5 years. So we like those dividend payers that are paying out of their free cash flow.
Nancy, what are you avoiding right now?
Oh, well, Bill, we're avoiding the utilities. They're too expensive, and that defensive play we think has run. We own no utilities. We're market weight energy, which means we own about 4% of our portfolio. And I wouldn't be adding to energy in here. And I forgot the other one that I gave you.
That's okay.
That's enough.
There's a lot of volatility in the market, and I can understand where it can be a little difficult. John, what would you stay away from?
Yeah, we are not hopping on any of the IPO trains that are out there for clients, at least for those clients that are looking for income. We think some of the valuations in the IPO market are just too crazy for our client base. So we think stick with high quality, stick with income, and hit it down the fairway in this environment. That's what we're looking for our client base.
Thank you both. Appreciate it. Nancy Tengler with Tengler Wealth Management, John Petrides with Tocqueville Asset Management.